Welcome to Trade of the Week with me, Zinati Kuma. In this week's analysis, Impala, Platinum, Nedbank and Gold are in the spotlight. And joining us with his survey of these counters is Petri, Redelinghuys, founder of Herenya Capital. Thank you so much for your time, Petri. I'm quite surprised that you are you're picking gold and a PGM stock, because recently there had seemed to be a rotation from gold to PGMs.
So
why?
It's a good observation. I think that platinum probably has a lot more upside to gold. Platinum's been lagging for a couple of reasons, but the veering or the belief at this stage is that platinum has a long way to catch up. So that's actually not a bad idea. Let's look at the platinum share price.
Yeah.
Because
because a lot of people have just been offloading on gold. But it's actually quite interesting because even, yesterday, I saw that the resources complex was up, but it was both the PGM stocks and the gold miners. So,
yeah. So let's have a look at those two. So as a basis of comparison, we can see sort of since 2020, let's just get them to re-zero. Hang on a second.
All right.
And
are we looking at gold and the the prices of gold and PGMs, but also which
versus so gold versus platinum.
Okay,
this is
just
what
platinum.
Showing us here, right?
Okay.
So we can see here over this period that gold's outperformed platinum quite a bit, right? Gold is up 140, 150%, as where platinum's up around 70. So platinum still has some way to go to close this gap, right? So yes, it's interesting that we pick gold as a metal, as that's breaking out into new highs. You can pick platinum as well. I think gold is a bit easier to get access to, but on the local market there's both new gold and new plat, which are ETFs or ETNs that you can use as to access, call it the physical market. So those are two very good access points to get exposure to these metals. So you could probably take a little bit of both. So we take a platinum stock because of the gearing element, and then we look at gold. I didn't want to pick gold stocks. I think we looked at some commodity counters a lot recently, and some of the gold stocks have run very hard, and some of them we believe will continue to run hard. Just the most recent things we've been adding to our portfolio has been platinum shares.
But also, not all of the miners have been benefiting fully from the gold price. I mean, we saw Harmony last week out with results, and because of their hedging strategy, they're not really benefiting fully. Is that also maybe one of the reasons? Yeah,
so I mean, we see that with energy companies, mining companies, all the like, that they essentially hedge their forward production based on what they believe the underlying commodity that they deal in or manufacture or mine or whatever is going to do. And sometimes that works really well if the gold price falls or stays stable, and sometimes it bites you.
And then investors get angry.
Well, the thing is, though, the reason people hedge, and this is why futures market exists in the first place, is the reason people hedge is so that we can predict the cash flow. So we know, okay, we need to make this much money to be able to break even, pay our bills, make a little bit of profit, pay all the salaries, whatever the case. Let's lock that in so that we don't take that risk. And then, yes, every now and then you think, oh, well, I could have made more. But if the gold price came down, if they started hiking interest rates out of nowhere and the gold price tanked 30%, I mean, these guys would look like heroes then, right? So sometimes you win, sometimes you lose. But what you do is you de-risk your business. And unfortunately, in times like this, investors go, oh, well, they should have done more. But, you know, not all hedging strategies are successful all the time.
I mean, I guess that's also the same principle with trading as well. So
yeah, exactly. I mean, essentially what they're doing is they're trading in gold. They're just making it.
Yeah.
Right? So they have a huge amount of input cost that they have to cover. And as long as they can cover that input cost and, secure the future of their business, that's their first priority.
Yeah.
Their second priority is to make, bucket loads full of money. But step one is, essentially ensure survivability, right? And that's why they hedge.
Okay.
So sometimes, unfortunately, you get left behind because of the gold price. But, the nice thing is those options expire. If the gold price stays high, the profit will come, and that stock will probably catch up,
profit.
and that'll create an opportunity for us.
Yeah,
So.
and they're still making a profit.
And they're still making money. So I think really, although I understand from a shareholder's perspective that you're in the one company that's not running, right? So it feels almost personal.
Yeah.
So I understand that, but just patience, it'll come.
Yeah. Okay. Well, let's get into the gold price. And it's actually quite interesting that you said that it's breaking new highs. I mean, this is something that I didn't really expect. Is it just that the environment is still quite supportive of gold bullishness?
Well, what's happening is you've got the US Fed that's kind of under pressure from the presidency in the US. That's a long debate.
Yeah,
I don't really want to go
there.
Okay?
It's a long
But essentially what we saw coming from the Fed is that they're kind of walking back from this. They've got a dual mandate to protect the job market, or just create jobs as much as they can, and to keep inflation within a target range, under 3%. So it's very similar to our our bands are slightly different, but it's essentially the same thing. So what the Fed in the US has kind of indicated is that they will allow inflation to run hot so that they can focus on jobs. So essentially they're saying we're walking away from our inflation targeting and trying to keep inflation down. We'll let that run as long as we can stimulate the economy to create more jobs. That's their number one priority. Right? And this is maybe a little bit of pressure from the Trump administration to make America great again, bring all the jobs home, blah, 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 that whole story. And the market is interpreting that as, okay, you're going to keep interest rates lower for longer, potentially cut interest rates, potentially do all sorts of other stimulus type situations. I need a hedge because if the dollar interest rate stays low, that might mean a bit of dollar weakness, whatever the case. So I want to get into commodities, and we know that there's a bit of an inverse relationship between dollar strength and commodities, and gold is like that bridge, right? So if the dollar comes down, the gold price goes up. So this is going to be good for the rand. This is going to be good for a bunch of other things. This is basically saying risk is on. So what this does lead to down the line is inflation, right? So gold runs first. A few months later, commodity prices run. We've seen they sort of started running already. So commodities are going to run for like the next year or so. That'll start really pushing inflation. And at some point, if the Fed's not going to hike rates to curb inflation, inflation gets out of hand. At some point, they get forced to hike. And then we have a bit of a slowdown. But until then, the market feels confident. The gold price broke the resistance level. I think we have spoken about the gold price on the show before, and how I think we've been using a daily chart. There's a lot of lines on here, so I'll take some of them off. But essentially, we've had the gold price kind of stuck under this resistance level at 34.30. So we managed to break through that. It's making a bit of what's looking like a shooting star, an inverse hammer formation, or a spinning top. Take a pick. It's not quite a shooting star, so it's more of a spinning top. So we could probably see a bit of a pullback, maybe even below the support level. But it looks as though from a trend following perspective, we broke a significant resistance level on the back of some fundamentally supportive news. Gold price is going higher. So there's a lot of people out there throwing targets around 3,800, some as bullish as 4,000, some as bullish as 4,200.
What?
I mean, it's not inconceivable that it goes that high, right? I think that sort of 3.8 is probably a good target. Between 3.6 and 3.8 is a fairly sort of reasonable target range for it. But it depends on your timeline, right? In 100 years from now, 3.8 is peanuts. In 2 weeks from now is very far, right? So it really depends. I mean, I think the ultimate thing that we know is gold is the hedge against inflation. It's a hedge against weakening currencies. I guess the only thing that's really beating it is Bitcoin, but we won't go there. And I mean, it seems to, the idea was, the fear was that this resistance holds and it pulls back down and we come down to longer term
Where's that? What's that
support.
price?
That's 2,600 or 2,700. So a pullback to there wouldn't be, I wouldn't consider that a crash. That would just be a sort of a mean reversion coming back down to respect trend lines, right? But it seems as though we've had this little flat top triangle situation that kind of broke out here. So I'm just drawing this bottom of this little triangle.
Gold is just seeming so defensive because, I mean, even with interest rates higher, the thing was that the macroeconomic environment is risky, so you're going to get into gold. Now, interest rates are going to be lower, you still want to get into gold.
Yes, exactly.
Okay.
So for now, it seems as though the gold market is the place to be. And, also the platinum market. Because the platinum chart also looks relatively good. It just has quite a bit more upside, if you will.
Well, I mean, obviously we're seeing this uptick in the PGM cycle, but I mean, at what stage are we in at this point?
I mean, that's hard to predict. I think a lot of the PGM demand is really from vehicle manufacturing. And catalytic converters and that kind of stuff. That's like sort of the industrial use for stuff. I mean, there's jewelry and all the rest, but we need to use it for industrial application. That's really even gold, right? Yeah. Industrial application is a big part of it. So if you look at what's been happening in the sort of EV space, and from a funding space for green energy, some of the bigger banks around the world are all kind of saying, well, this net zero thing is impractical, isn't going to work. Yeah. We're just, shifting our emissions down the chain into Africa, into some cobalt mine, like that's not fair. So the funding for these green energy initiatives is kind of drying up. And the taste for, or the desire, or the demand for EVs is kind of drying up. And people are saying, well, let's do hybrid cars, let's go back to petrol engines, we can make these things super efficient. And that is kind of that little pendulum swinging a little back towards traditional energy, fossil fuels, that kind of thing. And that, I think, is part of what's spurring demand for platinum.
Well, let's take a look at that platinum chart again.
So this is just the platinum chart.
Okay.
I can overlay the gold chart for you again if you like. We'll just do that. Bonk. So there's a big gap between these two, right? There's a lot of upside. So, I mean, you could, if you were a massive risk taker, you could go short gold, long platinum. I would rather just be long both. Okay. To be honest.
Okay. Do you have a specific timeline?
No, not really. I mean, I think that you could probably comfortably sit long gold for the next 6 months. Yeah. Because it's going to do two things. One, if it is in a sort of lower for longer interest rate, inflation is going to run hot scenario, gold is going to do well. Yeah. If it is in a, oh no, the market is going to come down, gold will absolutely have a liquidity event, which I'll explain in a sec, but then continue to be the safety hedge. So I think it's in a very good position at this stage. And yes, we're buying it at the top of the chart. I understand that. So if there is like a, call it a liquidity event, a big shock in the market, a massive crash, I don't know, aliens landed or Trump is assassinated or whatever, right? Like something that's low probability, super high impact. Yes. They lock us in our homes because of a virus, right? Something to that effect. The market will sell off on the back of that, and every asset class takes a hit because people think, oh, I need to free up cash. What do I sell? Everything I have. So you'll see crypto, you'll see gold, you'll see stocks, you'll see bonds, you see everything take a knock. And then after that, when everyone's like, okay, I've got all my cash, I feel safe, where do I put it where it's better than cash? Okay, gold is a good place, crypto is a good place. Now I start looking for US treasuries is a good place, out of the equity. So that at first there's that shock where money leaves the market, and then there's that, after that there's a bit of rotation into safe havens. Okay. In a emergency situation like a COVID or a crash or whatever the case. Okay. So barring something like that, I think just from a technical analysis perspective as well, I think gold probably continues to rally higher, and I think that if we see sort of loose monetary policy or low interest rates, maybe even a cut, people are expecting an interest rate cut later from the Fed this year, bring it, that'll probably pump gold up higher as well. And also platinum, that also means... And platinum will follow with it, commodities will follow with it, So gold is kind of the leader for that whole sector, right? Okay. So remember, PGMs is platinum group metals. Yes. So gold is one of those. There's 4 of them, right? So it's rhodium, palladium, platinum, and gold. Okay. So that whole PGM sector includes gold. It's a quarter of it. Okay. Well, let's go into Nedbank. The funder of these green energy projects. Right, let's go. Well, they sold EcoBank, so... yes. So, I mean, let that tell the story, right? Exactly. But it's interesting because Nedbank has been the laggard in that SA banking space. Are you bargain hunting here? It's a little bit. It's also ex-div tomorrow. Oh, yes. So, Wednesday. Yeah, so it's gonna get a bit of a hiding probably in the morning, and that's going to be a great time to buy, I think.
Okay, so not necessarily buying it today.
Not necessarily, yes. So Wednesday morning it goes ex-div. We'll see. Sometimes they give free dividends. The stock price, stays the same, and you get the free divvy. But odds are pretty good that it goes down by the dividend price, and that might be a good time to buy it.
Oh, and you would think that maybe that could signal then a possible bottom?
Yeah, I think so. I think if you look at the rest of the banks, I mean, last time I was here, and we were talking just before, if it was 2 weeks or 3 weeks or however long ago it was, we were talking about buy the leaders, not the laggers.
Yes.
And now it's like 2 weeks later, I'm like, okay,
buying the
lagger. But it's a bit of a different play. It's right essentially on the support level. I mean, let me draw in some lines here. Now, this isn't exact, okay? So you're going to have to forgive. We'll make it a solid line, and we'll make it slightly thicker. We'll make it super thick. Okay. For a TV. All right, so there's that, and then we have this sort of little range situation that it's in. So we can see last time we had an interaction around this. We had a very strong bounce. Now we've got another interaction around this. We're going to get probably a bit of a gap down tomorrow. Right. But I see this zone historically as quite a significant resistance area. We could probably make this a box rather than a specific line, right? So you could probably call that a previous resistance and now support zone, if you will. So that's maybe a bit big, but you get the idea. So I think we're in this little space here. We probably go ex-div tomorrow. That is potentially a good opportunity to buy. Right. If the move is bigger than what the dividend payout is, you're getting a discount. Right, so if there's a little bit of panic, and there's going to be somebody out there with a stop loss who goes ex-div, the stop loss is hit, the thing drops down another buck or two, that's going to be a good opportunity to buy some, I think.
Okay, yeah, this is very, very interesting. Okay, we'll be looking out.
But keep in mind, this is a trade. Hey? We're not buying this to have it hold. Okay. We're happy to take gold for the next 6 months. We want to keep Nedbank as long as it goes in our favor. So if we break out below the midpoint of this range, so we could use the bottom of this. Use the bottom of this little shape or this little rectangle that we drew in here. So if we break below the midpoint of that range, call it 214, 213, then you stop out. All right. Because you're essentially trading the range break and a back test and a continuation of this trend, right? So if we break back below this, then your trade is off. So you've got a very good risk reward here. If you go for the high, let's say you go for 300 as your target, and you enter at 225, right? With the stop loss at 210, you got a 15 rand stop loss, and you got a 60 bucks or so on the upside.
All right. Well, thank you. Very, very interesting insights that you've given us today. I really appreciate it. That was founder of Herenya Capital, Petri Redelinghuys. That is all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.